Hello students, today we'll do problems on cash budget. So what is cash budget? It is nothing but preparing a budget as to your cash inflows and outflows can be depicted in that. So you get to know how much money has come in, how much has gone out, and it is a budget. That means it is a plan for the next 3, 4 months or 6 months. When you prepare a cash budget, you get to know what is your cash requirement and you can arrange for it by taking a short-term loan or by your own funds that you have. So today we'll learn how to prepare a cash budget with the simple problems. So this is the problem. They have given you the forecasted expenses for income and expenditure in the question, and they have told you to prepare a cash budget from the months Jan to April. So we have to prepare it for Jan to April. Okay, so let's start working on that. Okay. Okay. So here is the question, and this is how the cash budget will look like. Just write the heading cash budget. Okay, so from Jan to April, they have told us we're preparing it from Jan to April, and we will have two columns, that is cash inflows and cash outflows. We divide our budget into two parts. So let's see, the first thing what they've given is credit sales, purchases, wages, manufacturing expenses, admin and selling. The first adjustment says the customers are allowed credit period of 2 months. Customers are nothing but the person to whom we have sold goods. So our credit sales are our customers, and we are allowing 2 months credit to them. That means if I have sold goods in the month of November, the customer can pay me after 2 months. That means he can wait for November, December, and he can pay me in the month of January. So when the customer is paying it to me, I am receiving. So when I am receiving, I call it as my cash inflow. So 30,000 of November I'll receive in January. So what is this 30,000? I will call it as accounts receivable, and it is nothing but your credit sales. Okay, then December credit sales 35,000 I'll receive after 2 months. So December, January I'll leave, I'll receive it in February. So in February I'm receiving 35,000. So that's the next thing. Then January credit sales 25,000 I'll receive in March after 2 months. I'll leave Jan Feb, and in March I'll receive 25,000. Then next is February credit sales 30,000. I'll receive it in April, leaving Feb and March. So 30,000. We have been asked to do only till April, so we'll not go ahead with the May June budget. So that's about the credit sales. Second, a dividend of rupees 10,000 is payable in the month of April. Payable means it is a payment, so it will go in cash outflow. What are we paying? The very first thing, dividend, and it is the amount is rupees 10,000 and it is payable in April. So we'll go to the April month and we will pay 10,000 rupees here. All other months it will be nil because there is nothing that is happening in Jan, Feb and March. Similar way, we'll see the next thing. Plant purchased on 15 January for rupees 5,000. So in the month of January, we have purchased plant. When you purchase plant, you make a payment for it. So it will come under cash outflows. Plant purchase, you have purchased it in January and you're paying 5,000 rupees for it. The next months it will be nil because it's only January payment which they have mentioned. After that, every month how much to pay, nothing is mentioned, so we are not going to take it. Next. Fourth one, a building is purchased on 1st March. The payments are to be made in monthly installment of rupees 2,000 each. So again, you are purchasing building, so you have to make payment. So we'll write here building purchase, and you purchased it in March, so nothing happened in Jan Feb. You purchased it in 1st March, so you have to pay the payment installment of 2,000 in March and 2,000 in April, and after that May June also, but they have asked us till April, so we are solving it only till April. The next problem, the next adjustment, the creditors are allowing credit of 2 months. Now creditors are related to your credit purchases. These are the people from whom you purchase goods, or they are your suppliers. So you have purchased goods but you have still not paid, so they are giving you 2 months time to pay. That means whatever I have purchased in November, I can pay it in January. I'll not pay in November, December, I'll pay it in January. So 15,000 is your purchases, or you can also write it as your credit purchases. Purchases payment you're making. So 15,000 of November I'm paying in January, then 20,000 of December I will pay in February. So 20,000 of December is paid in February. 15,000 of January will be paid in March, because after 2 months, so Jan Feb I won't pay, and I'll pay it in March. I'm seeing the credit purchases. Okay, then 20,000 of February will be paid in April. So this is how your credit purchases will be paid. The next thing, next adjustment, wages are paid on the first of the next month. That means it's not paid in this month, it is to be paid in the next month. So 1 month time lag. So look at the wages. 3,000 of November will be paid in December. We are not preparing December cash budget, so we're not bothered about it. We are not going to take it. December 3,200 we are paying in Jan. So that we'll have to record here, 3,200 in Jan. And what is this? This is wages paid. So December wages are paid in Jan. Then January wages 2,500 will be paid in February. February wages 3,000 will be paid in March. And March wages 2,400 will be paid in April. So this is how we'll take the wages payment. Next, lag in payment of other expenses is 1 month. So 1 month for all other expenses. Which are those other expenses? Manufacturing expense, admin and selling. So we'll make a columns for all these three. I'll write down here manufacturing, admin expenses, and the last one, selling expenses. What we're doing, we are paying them 1 month late. So let's see, manufacturing expenses of November will be paid in December, but we are not preparing December account. We are preparing January account. So December expenses, that is 1,225, 1,040 and 550 will be paid in January. So all these three we will pay it in January. Then January expenses will be paid in February. So January, all the three expenses, I'm paying it in February. Feb expenses will be paid in March. And March expenses will be paid in April. So here you can see we have taken all the expenses in the table. We took credit sales as accounts receivable, we took purchase payment, wages, manufacturing expense, admin and selling expense. All the entire table is covered, as well as all the 7 adjustments we have covered. Now the last part, balance of cash in hand on 1st January is 15,000. So that we call it as opening balance. Now what you can do, the two ways to solve it. I'll show you the way which we are going to do it in. We will add opening balance at the end. So here I will create another column and we'll write it as opening balance. And for January it was 15,000. We'll leave it till here and we'll see further what we have to do. Now we have to total our cash inflows. So I'll write it as total here, and there is, we call it as total of A. The only one inflow, that is accounts receivable. So the same thing will be the total as well. So your total of A. Then we'll total our expenses. We'll call it as total of B. We have to add all this. So just a moment. When you add all that, you get total of B. So you need to record the total of B. And when you do A minus B, you get the surplus or deficit. So it's 26,015 here. me just add all this in the Excel. So 25,190. 22,820. It is for March. And last one, April total we have to do. $37,290. So this is how you get them. Okay, now there should be another column here, row here. So we shift the opening balance below. Here will come surplus or deficit. And how you find surplus or deficit? You do A minus B. That is nothing but cash inflows minus cash outflows, which you have already named it here. This is named as B, total of B, which is cash outflow, and total of A, which is cash inflow. So from 30,000, you have to minus 26,015. So your surplus or deficit is 3,985. So this is your first answer that will be seen. Okay, then 35,000 minus 25,190, you get it 9,810. The third one, 25,000 minus 22,820, 2,180 is what you get. And 30,000 minus 37,290 minus 7,290 is your deficit here. So for January, February, March, you have surplus, and for April you have a deficit. Now what we do here is we add the opening balance to this. So add opening balance, and when you add it, what you will get is the closing balance. So this is how you have to prepare your cash budget, and you will get the closing balance. So 3,985 plus 15,000, if I do, I get 18,985 for January. Now the closing balance of January will become the opening balance of February, because we close in January and we carry it forward in February. So 18,985 is the opening balance of February. To this you add the surplus 9,810, you get 28,795 as the surplus of February. When you copy this surplus and take it forward to March, you get opening balance of March as 28,795 plus the surplus of 2,180. Closing balance will be 30,975. The closing balance of March will become the opening balance of April. And now we have deficit in the month of April. So from 30,795, you minus the deficit, that is 7,290. You'll get the closing balance as 23,685. So this is how you prepare the cash budget. Maybe the calculations may be a bit wrong, or I mean they may be correct as well. Calculations here when I'm teaching doesn't matter, because what you have to learn is how to calculate, how to prepare a cash budget. So if you've understood the steps, that's really great. You can check with the numbers addition and all. If I have done some error, you can correct it. So you get surplus and deficit by my A minus B. When you do, you get surplus or deficit, and A and B also I'm highlighting it with yellow. A is cash inflow total, B is cash outflow total. So this is how you prepare a simple cash budget problem from January to April is what I have prepared. Let's move forward to the next problem. From the information and the assumptions that the cash balance in hand on 1st December 2015 is 72,500, prepare a cash budget. Now here you have to prepare a cash budget for how many months, we'll have to check. Okay, assume that 15% of the total sales are cash sales. Assets are to be acquired in the month of Jan and March. Just a second, I'll just check. So you have to prepare a cash budget from December to May because they've not told for how many months. So we take all the months, that's from December to May. Particulars December, January, February, March, April, May. So we need these many columns. Okay, so the next sum, we'll do it in the next part of the next session.